Okay, so we are going to dive into the monthly market review. This is going to be for September of 2023. As you know, we will we always go through the 7-day market report because that gives us the real time, as good as as accurately as we can get, a real time understanding of what's going on in the market and what we need to prepare for strategically and make strategic decisions based on real activity in the market. And if things start to shift, we can see that very quickly because we're using a 7-day market report. Versus the monthly market report, this gives us a more bird's eye view of what's going on in the market, so we can see the trends and we can get that global perspective versus the microcosm. So we're going to dive into the numbers and the graphs of what's happened for the month of September 2023 versus September of 2022, and kind of see what the trends are doing and see what it looks like the market in general is doing. All right, so let's dive into the graphs. All right, so first thing we want to look at is number of new listings. This is the inventory. We've been talking about inventory being an issue now for quite some time. You can see that in September we had 179 new units. Now remember, this monthly market report is based on Vienna, Virginia, Great Falls, Virginia, and McLean, Virginia. So it gives us a good microcosm of the whole area in a smaller area. That's why these numbers seem kind of low. So 179 new listings in September of 2023 versus 229 in September of 2022. So it's still significantly lower, but it's not nearly half like it was in August. August of 2023 was 181. August 2022 was 358. So it's kind of stabilized a little bit with regards to the number of new listings. We're seeing a little bit of a nice stabilizing of inventory. It's not picking up. We still have a significant shortage, but inventory is staying at least stable for the last 60 days. Now, if you go to look at the number of sales, you have 120 sales in the month of September versus September of 2022, 140 sales. So pretty much on par with what happened in 2022. It's again, volume is decreased, and I'm not surprised that they're getting closer with each other, because in the fall of September 2022, the interest rates had already taken hold and had really started going up, and that effect had happened. So we've kind of stabilized where we are now at this point. Versus when we were comparing March of 2023 versus March of 2022, there was a 50 to 60% reduction because the interest rates were just starting to happen. So the numbers hadn't come down. So for example, if you look at July of 2023, it was 210. July of 2022 was 415. Okay, so we hadn't hit those high interest rates yet. The market was still kind of in a beginning its downward trajectory with regards to total activity. But now we've kind of stabilized. When we hit September, October, we had been experiencing the increased interest rates for about 3 to 6 months at that point. So the market had gotten stable into its response to those interest rates. And so that's why I think our numbers are more steady. Okay, I know there's a long speech on that, but hopefully that makes sense. All right. Okay, so number of new listings, 179, number of new sales, 120. Days on market. So this is one of the telltale signs of, is the market starting to slow? Are we starting to move towards the buyer's market? Basically, days on market tells us how long a property was on the market and it took to sell. Now, when you see these numbers, keep something in mind. These numbers tend to be higher than what we see on the market, and the reason for that is because we all see properties that go on the market and they're gone in 4 days. That happens nonstop. But what we don't see is when there's a new build, for example, quite often that new build will be on the property or on the market for a year, 275 days, just because it's on the market while it's being completed. Because a lot of these spec homes will allow buyers to come in, or not spec homes, but these custom builds will allow buyers to come in and purchase early and make changes. So we have properties that sit on the market for an extended period of time, so they bring that average days on market up. So we're comparing. To compare apples to apples, you can't think about the individual houses, you have to look at the whole market. And so that's what we have here. September of 2023 was 23 days on market. That's actually the lowest since June. And even in the spring, March was 27 days, April was 23 days. Through the peak of buyer demand and market activity, you can see we were right around that 27 to 22 day on market range. and we were 23 days for September. So that was a significant change, especially when you consider from last year it was at 53. So buyer demand is there, properties are selling very quickly, inventory is certainly needed. How many months of inventory are there? So months of inventory, this tells us how if we stopped putting new houses on the market, how long would it take for all of the inventory to sell? That's what months in inventory means. A good neutral market is probably about 6 months worth of inventory. Anything above 6 months is considered a buyer's market, and the higher you go above 6 months, the stronger the buyer's market. Anything below 6 months is considered a seller's market. So the lower you go, obviously the stronger the seller's market. So September, we had 4 months worth of inventory. September 2022, 4 months worth of inventory. So again, kind of stabilizing a little bit. And we've been in the 3 to 4 month range for several months now. So months of inventory are staying there. So inventory is certainly consistent. And that's what we're seeing on our weekly market reports. Just to jump over here real quick, we're seeing that we're staying in this just steady seller's market. So that's what we're looking at. Now, if you go to median sales price, again, just a real quick review of what median sales price means. I do this every month when we do this market report, but it really helps in case somebody new is watching the market report. So median sales price is basically the number that fell in the middle of all the sales that occurred in a given month. I see the cat back there. I was like, is that Kelly? All of the sales that occurred in a given month. So for example, month one here, we had a $3 million sale, 2.75, 1.65, 1.5, 500, 350, 275, 225, 220. So the median sales price for month one was $500,000 because that's the transaction that fell right in the middle, 4 above, 4 below. So it was the one in the middle. So median sales price, $500,000. Month two, we have the same number of transactions. We have a 4.25, 3.5, 3.25, 2.5, 400, 395, 385, 350, 315. Now, if you look closely at these numbers, all of these numbers are higher than all of these numbers. But that median sales price, the one that falls right in the middle, was $400,000. So month two had a median sales price of $400,000. So that's a 20% reduction in median sales price, okay? The media, in a situation like this, the media is going to have you believe that now that it's a 20% reduction, house prices are falling, house values are falling, so now you can get a $500,000 house for $400,000. It's not at all what that means. It just means that the houses that were bought, that's where that middle number fell. So what does that mean in reality? Well, if median sales price is a good statistic to use, because when you have a large number of transactions, it keeps the numbers from skewing based on really, really high sales or really, really low sales. For example, if there's a $25 million sale in here, that means that average sales price is going to be really high. So it gives you a good idea of where that middle is. Well, even if median sales prices start to come down a little bit, well, when you're in the world of high interest rates, people can't buy as much, so they're going to buy lower priced houses. So that median sales price can move down even if the actual competition is causing prices to rise. They're just buying lower priced houses. Okay, so median sales price moving up or down in and of itself does not mean that the market is moving up or down. So that's why it's important to understand that. You have to look at individual properties. You know, if a property was worth $500,000 last year and now it's selling for $400,000, that's a true decrease in value. But median sales price does not give us that answer. It's just a statistics that is used. So when you go over here for median sales price, our median sales price for September of 2023, $1.137500. September 2022, $970,000. So if you look at that, you're going to think, oh my God, prices are going up. What is that? 1.3 million. It's almost, I don't know what the math is on that, but at least 25%, right? You're thinking prices went up 25%. Prices did not go up 25% over the last 12 months. They have gone up. So it is accurate in the moving up, but it's not accurate as far as what the house values were. So a $970,000 house in 2022 is not now worth $1.3 million. $970,000 house in 2022 is probably now worth, let's say, $1,100,000, maybe 1.15, something like that. But the median house price is here, and we do keep track of that just so that we have the data for that. Okay, so what are we expecting the market to do as we move forward? So this just gives us a rough idea about what we can expect the trend to do in the near future. So September 22 versus September 23, market activity, was it up? Meaning, were there more listings? Were there more sales in 23 versus 2022? Was it neutral? Were they even, or was it down? Well, it was much more towards neutral this year than previous months have been, but truly it was still down. So we are down as far as our market activity. What were our months of inventory? What was the supply versus demand? Well, supply versus demand, remember 6 months is neutral, 5 to 6 months is neutral. Under 5 months is a seller's market. We were at 4 months, so we're here. So 2022 versus 2023, total activity was down, but our months of inventory is under 4 months, which means that we can continue to expect increased appreciation. And we did a very long, or very detailed graphic market report explaining why prices are going to continue to go up and what the expectations are with that. So it looks like we're still moving in that upward trend with regards to market prices, and market activity is starting to level out a little bit versus continuing to decrease. And we will just be back on next month's video to see what October did and give you a comparison there so you can get that bird's eye view of what's happening in the Northern Virginia market. All right, excuse me, we'll see you next week.